Welcome to the show, everybody. I'm Mayo Adiemi, and today I want to start with a very specific, painful scene. Picture this. It's May. Tax season has just wrapped up, and you've successfully filed your returns. But you log into your business bank account, and your stomach drops. That healthy cash cushion you thought you had, gone. Wiped out by a single, massive tax payment. You look at your upcoming payroll, your supplier invoices, and suddenly you're in a panic. You have what I call the post-tax hangover. And let me tell you, as a financial strategist who has worked with thousands of entrepreneurs over the past 35 years, this is the number one trap that kills promising businesses. It's not a lack of revenue. It's the transition from a reactive, hope for the best mindset to a proactive, structured system. When you pay your taxes in one giant lump sum panic once a year, you are essentially playing Russian roulette with your working capital. So how do we break this cycle? We have to establish a dedicated, non-negotiable tax reserve bucket. This is not optional. It is a fundamental law of business survival. Think of it like a tax withholding system that traditional employees have, but you are building it for yourself. And the beauty of this is that it doesn't need to be complicated. I don't want you spending hours on spreadsheets every week. Instead, implement a simple percentage-based withholding routine. Every single time a client pays an invoice, or at the end of every single week, you take a fixed percentage, say 5 to 10% of your gross revenue, depending on your local tax bracket, and you transfer it out of your main account immediately. Let that sink in. If you bring in $10,000 this week, $1,500 of that was never actually yours. It belongs to the state. By moving it immediately, you align your mental math with economic reality. You stop making hiring or purchasing decisions based on money that is already spoken for. Now, this leads us directly to the practical execution of this strategy, which is what I call the two-account system. Because here is the psychological trap. If all your money sits in one single business checking account, you will experience what I call artificial confidence. You look at that balance, you see $50,000, and your brain says, "Excellent, we are doing great. Let's upgrade our software. Let's hire that coordinator." But you're forgetting that 10% of that is tax liability, and another 40% is committed to next month's rent and inventory. To break this mental trap, you must physically separate your money. You need at least two distinct accounts, your operating account and your reserve account. Your operating account is strictly for the daily inflow and outflow of business, paying utilities, payroll, and receiving client payments. Your reserve account, however, is a vault. It's where your tax allocations go and where you build your business emergency fund. And what is the target for that reserve account? I always advise my clients to aim for 3 months of essential operating expenses. If it costs you $15,000 a month to keep the lights on, your reserve account needs $45,000 sitting in it untouched. That is your shield against economic downturns, lost clients, or unexpected policy changes. Now, how do we keep this system running smoothly without it becoming a chore? It comes down to daily and weekly financial habits. First, proactive invoicing. Do not wait until the end of the month to bill your clients. Invoice immediately upon delivery. The faster the cash enters your operating account, the faster you can allocate your percentages to your reserves. Second, establish a structured weekly financial check-in. Choose one day, let's say Friday morning at 9 a.m., before the chaos of the day begins. Spend just 15 minutes looking at your numbers. Move your tax percentages to your reserve account. Review your outstanding invoices and look at your cash flow forecast for the next 2 weeks. Remember, financial freedom is not built by chance. It is built through knowledge, discipline, strategic action, and consistent execution. Don't wait for the next tax season to scramble for funds. Build your reserve bucket today, separate your accounts, and give your business the breathing room it deserves. Thank you for listening to today's Quick Take. Go execute, keep your numbers clean, and I will talk to you next time.